the FMCG numbers. So let's hear about the quarter se quarter tak for FMCG.
Yep, let's do that. In fact, you know what I can tell you about the FMCG numbers this time around ahead of Nestle's results is that it's a quarter where there will be a fair amount of transition. So you just move around and look at how the street is expecting the setup to be. It's a quarter in transit, largely because in the first half of the quarter, there was higher than expected rainfall in some parts of the country. In fact, there was flooding in some parts of the country as well. So as a result of which, there was some weakness in demand. GST cuts were announced with effect from September 22nd. So as a result of which, some destocking impact as well would happen. But the good part, Tier 2 and rural growth has actually outpaced urban, which has been facing a bit of a slowdown, but gradual improvement is what we're seeing out there as well. So this is a quarter, which is a quarter in transition. So what we need to watch out for would be loss in primary sales due to GST transition, demand commentary in the third quarter, and stability in key raw materials. Apart from all of this, we'll also watch out for a couple of leadership announcements, strategic leadership announcements, because for HUL is the first quarterly performance under Priya Nair, and for Nestle also under Manish. And finally, consolidated business growth for HUL will be flat to low single digits. So that's the one company. Among the others that have reported their updates so far, Godrej Consumer, mid-single digit revenue growth, EBITDA declined year on year, and that's largely on account of the GST-related transition. For Marico, strong double-digit constant currency growth for their international business, but overall growth has been coming in at near 30s. So that's something we will most definitely watch out for. For Dabur, consolidated revenue growth in mid-single digit with margins which are maintained. So bunch of companies are on our radar. Retailers, however, they've had a reason to cheer as the early festive season has boosted footfalls. V-Mart's same-store sales growth up 11%, V2 retail up around 23% as well. And it's been a glittering quarter for all the jewelry players, led by a sharp surge in the prices of gold. And all these stocks are well bid even in today's trading session. So Titan saw 19% on that base growth in their domestic jewelry business. Kalyan Jewellers as well, 31%. But if you look at the overall expectations, analysts expect varied performance across the board. So for Asian Paints, the revenue is likely to decline 2 to 3%, EBITDA likely to improve by about 8 to 10%. Tata Consumer would be one of the stocks I'll be watching out for, 15 to 17% top line growth with a slight decline in margins. Britannia, the impact of GST transition would be felt most on Britannia, so that's something we'll be watching out for. And even Nestle and Colgate, the worst performance this time around may come in from Colgate. But apart from all of this, the three numbers that I'll be tracking personally very closely is one, trend, because we already have the second quarter update. The stock has seen a bit of a correction. Post the actual numbers, could we see a turn in sentiment or not is something they will be watching out for. Trend. For Tata Consumer, how does growth pan out is something we'll be tracking. And finally, for Eternal as well, management commentary. For the FMCG sector, valuations have always remained rich, and this time around as well, not too different. But the only solace that one can have is that the current valuations are a lot lower than 5-year average valuations, even though the current profitability growth and revenue growth have been lower than 5-year compounded averages as well. So it's a quarter marked by transition, tempered growth, and a plenty of hope riding on the GST cut-led festive rebound ahead. In fact, as we speak, we also have Abneesh Roy, who's the Executive Director, Nuvama, for Consumption and Research, joining in. Abneesh, it's a quarter which is in transit. What is it that we can expect in terms of outperformance from a couple of companies, and the one or two things that you'll be watching out for from management commentary?
Yeah, thanks. Good morning. Yes, today the FMCG results will start, and Nestle clearly under Mr. Manish Tiwari, this will be the first quarter. So from a top tier performance in Q2, we expect Bikaji Foods, Marico, Tata Consumer, Pidilite, United Spirits to be the star performers. And laggards clearly wherever the high rains have impacted and GST impact is on the higher side. Such companies will be Imami, Colgate, United Breweries, Varun Beverages, Godrej Consumer, etc. Coming to Q3, my sense is we will see good news coming back. See, Q2, as Mangalam highlighted, is not the right quarter for staples, especially because first 2 months there was a recovery. But from September 6 to September 22, there was a 4 days kind of an average impact on the sales because of the GST transition. So basically, whatever number comes today and next 2-3 weeks, basically there will be almost minus 4% kind of impact because of the GST transition destocking. And that's why that's not the right number to look at. We do see in Q3 grammage addition coming in lower unit packs, affordability in the bigger packs, and of course some level of restocking will happen. So our topics will be essentially the food companies. We like Bikaji, we like Britannia, Nestle. We also like Hindustan Unilever. And discretionary, we like definitely United Spirits. We also like Asian Paints and Pidilite. So those
Got it. Surprising that you like Asian Paints right now, because most on the street are still, not with, very positive on Asian Paints given the sort of disruption that there is right now. But I take your point, Abneesh, not the perfect quarter to look at, but the third quarter will be extremely crucial. Volume growth expectations. What are your volume growth expectations from the second half of this year, largely because there would be that additional grammage impact coming in as well? And what are your margin expectations? Because even though raw material prices are volatile, they've not seen a big surge. Do you see any room for margin expansion from here on? And how are all of these, when you look at the valuations, how are these placed for the entire pack on the whole? Because valuations, while they're lower than their 5-year average, they're still, pretty much in line with the sort of performance that we've seen over the last 3-4 years.
Yeah, good question. See, from a GST 2.0, clearly from a food companies, I think the impact is on the higher side in terms of benefit. So that's why Britannia, Bikaji, Nestle will be the bigger beneficiary. The simple reason is the 5 rupee, 10 rupee pack grammage addition happens, and consumer buys a pack of, say, bhujia or a biscuit. He doesn't buy a grammage of, say, 100 grams. So the real consumption boost will be there in such packs. Unlike that, in Colgate, if you see, yes, 30-40% of Colgate is also lower unit pack. And initially, they will also see the grammage benefit in those packs. But in a 1-year perspective, those things will normalize. In toothpaste, that's why I don't see too much of a direct benefit of GST 2.0. On the flip side, Colgate can see some impact of the inverted duty structure. So coming to margins, it's a function of operating leverage, it's a function of raw material, and it's a function of GST 2.0 inverted duty structure. That's why I'll be cautious on Colgate. In terms of benefit, I think clearly operating leverage benefit will come in Britannia. My sense is Britannia can touch double-digit volume growth also in H2. So basically from October 15th is where I think the recovery for FMCG restocking and the normalization is going to happen in most of the categories. So that's why Bikaji, Britannia, Nestle will see a good uptick in terms of volumes and some level of margins. I don't think companies will retain any GST benefit, but operating leverage benefit will come for Britannia, Bikaji, Nestle, etc. in H2. So yeah, we are positive on those three names from a valuation perspective also.
All right, it's Diwali. So let's talk about the drinks. What do you like out there? We have a trailer coming in, I think, from JM Breweries as well. Those numbers look good. Obviously, it's on a smaller base. But how you approach this space? Are you enthused?
Yeah, we are seeing a trend reversal there. So in United Spirits, if you see Andhra and Karnataka really firing, and in Q2, those two markets have really helped in spite of decline, almost high single-digit decline for spirits companies in Maharashtra, and some companies double-digit decline in Maharashtra. Karnataka and Andhra are making up. And from a H2 perspective, you're absolutely right. Disposable income will definitely increase. And that's why I think spirits companies can benefit. Second, of course, is United Breweries. Q2 will be quite weak because of the very high rains. We expect -2 India volumes. In fact, in H2, we expect recovery there because Maharashtra, as I said, spirits is seeing almost double-digit volume decline. Beer is starting to see the benefit. It has not come in Q2. It will come in Q3 and Q4. So we are positive on United Spirits from a Q2 H2 perspective and United Breweries from a H2 perspective. Q3 will be weak for United Breweries.
Okay, cheers to that, Abneesh. Always good to hear your thoughts. You're optimistic on Asian Paints, United Spirits as well, and mixed trends coming in for the FMCG pack. We look forward to hearing from you as the numbers start hitting the screen, Abneesh. But thanks a lot for joining in today. Well, let's slip into a short break. We'll focus more on the markets as well as on stock-specific actions. Stay tuned.